Good evening. I hope you all had a nice day. Today the market rose on positive vaccine news. The Nasdaq gained 0.59%, while the Dow did better as it posted a gain of 0.85%. The S&P 500 did the best as it rose 0.91%. Yesterday after the market closed, it was announced that Supreme Court Justice Ruth Bader Ginsburg was hospitalized for a possible infection. She underwent a procedure to clean a bile duct stent and will stay in the hospital for, quote, a few days, according to a court spokeswoman. The left-leaning Supreme Court justice is the oldest justice, currently being age 87, and has been on the Supreme Court since 1993. She has been a large advocate for the advancement of gender equality and women's rights. As I was recording this, it was announced that she has been discharged from the hospital with the spokesperson saying, quote, "She is home and doing well," end quote. Notably, after the market closed Tuesday, President Trump signed a piece of legislation to impose sanctions on China in response to its interference with the autonomy of Hong Kong. Trump also signed an executive order which will end the preferential treatment of Hong Kong. Trump said, quote, "Hong Kong will now be treated the same as mainland China. No special privileges, no special economic treatment, and no export of sensitive technologies. In addition to that, as you know, we are placing massive tariffs and have placed very large tariffs on China," end quote. In response, China's foreign ministry said that they will impose retaliatory sanctions against the U.S. The ministry said, quote, "Hong Kong affairs are purely China's internal affairs. No foreign country has the right to interfere," end quote. Today, the U.S. imposed even more sanctions on China, as the Secretary of the State, Mike Pompeo, announced that the U.S. will be imposing visa restrictions on Chinese tech firms. He said, quote, "State Department will impose visa restrictions on certain employees of Chinese tech companies like Huawei that provide material support to regimes engaging in human rights violations and abuses globally," end quote. He then described Huawei as, quote, "an arm of the Chinese Communist Party surveillance state that censors political dissidents, enables mass internment camps in Xinjiang, and the indentured servitude of its population shipped all over China," end quote. He even claimed that Huawei provided, quote, "material support to the Chinese Communist Party regime that commits human rights abuses." Recently, the British Prime Minister Boris Johnson followed suit and announced that they will get rid of all of Huawei's 5G technology by the end of 2027. Pompeo found himself making more headlines today, as he said, quote, "I think the world will absolutely make them pay a price," end quote, regarding to China and their handling of the pandemic. He continued to say, quote, "Every place I go, every foreign minister that I talk to, they recognize what China has done to the world. I'm very confident that the world will look at China differently and engage with them fundamentally different than they did before this catastrophic disaster. When you have an incident in your country that could potentially lead to a pandemic, you have an obligation to report that and to allow others to come in and help you be transparent about it. The Chinese Communist Party chose differently. They co-opted the World Health Organization to achieve that cover-up. The result today is that we have hundreds of thousands of people who have died and trillions of dollars in global damage as a direct result of the Chinese Communist Party's decision," end quote. The feud between the U.S. and China only looks to become worse. In a new report from Moderna, it was reported that its potential vaccine produced a, quote, "robust immune response in all of its 45 subjects in their early-stage trial. According to the data, all 45 patients produced neutralizing antibodies, which researchers believe are important for the building of immunity and protection against the virus." Dallas Federal Reserve President Robert Kaplan said that the economic growth of the U.S. will accelerate next year as the country attempts to rebound from the recent economic crisis. He said, quote, "In 21, we will see an above-trend growth, and we'll continue to grind down the unemployment rate. I still believe if we follow these protocols, we'd see a rebound from the deep hole we dug in the second quarter. The question is, when you get to a normalized economy, and it's going to depend on the path of the virus and how well we manage it, and the timing of the vaccine. I'm optimistic we'll work our way through this, but it would be a lot less costly if we did a good job managing the virus." End quote. He also added that the most important thing for the economy right now is not more fiscal stimulus from the Fed, but instead it is getting citizens to wear face masks and drive down the spread of the virus. He said, quote, "If we do an outstanding job and a better job managing the virus, we'll not need to do as much. That would be better for the country if we didn't have to." Mortgage rates fell to a new record low again last week. Total mortgage applications rose 5.1% compared to the previous week. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances of up to $510,400 decreased to 3.19%, down from 3.26%. Points, including the origination fee, decreased to 0.33, down from 0.35 for loans with a 20% down payment. That rate is 63 basis points lower than the recent high in late March. Demand from homebuyers fell back 6% for the week and was 16% stronger than a year ago. According to the Labor Department, U.S. import prices rose 1.4% last month, after increasing 0.8% in May. Economists polled by Reuters had forecast import prices, which exclude tariffs, gaining 1% in June. Prices rose more than expected due to a surge in the cost of fuel. Reuters noted that the overall trend remained weak, thereby suggesting that inflation could stay tame despite a rise in the Consumer Price Index last month. Today, the Trump administration ordered hospitals to send data on coronavirus patients directly to the Department of Health and Human Services instead of the CDC. This raises concerns about transparency, as some former health officials worry that the move could result in less clear data, although they acknowledge in interviews that the CDC's data collection system is outdated. A spokesperson for the Department of Health and Human Services said, quote, "The CDC's old data gathering operation once worked well monitoring hospital information across the country, but it's an inadequate system today. The President's Coronavirus Task Force has urged improvements for months, but they just cannot keep up with this pandemic," end quote, according to Dr. Bill Winkenwerder, who served as the Assistant Secretary of Defense for Health Affairs under President George W. Bush from 2001 to 2007. He said he doesn't think it's fair to characterize the decision as necessarily political. He said, quote, "The key point is the HHS and the White House need this data quickly to coordinate a whole host of decisions that are not made at the CDC level. The 1 week lag that was described, that is a long time. Every day counts, so I can understand why they need and want that information," end quote. 4 former CDC directors said in an op-ed, quote, "It is not unusual for CDC guidelines to be changed or amended during a clearance process that moves through multiple agencies in the White House. But it is extraordinary for guidelines to be undermined after their release." Trump also rolled back the National Environmental Policy Act today. NEPA was signed into law by President Richard Nixon 50 years ago and requires federal agencies to consider the environmental consequences of infrastructure projects before they are approved. As you can imagine, this law played a large role in allowing communities to speak up on projects that will affect their health, safety, and even climate change. The move to dismantle NEPA will likely be challenged in court and also come before the November election. Under a different administration, Congress could potentially put an end to Trump's weakening of NEPA by a majority vote and the president's signature. The administration's changes will aim to decrease the number of infrastructure projects that will be subject to NEPA review, effectively shortening long permit processes that have historically delayed projects. This is a huge win for the energy sector and an even bigger loss for the environment. The U.S. recorded a gain of 67,400 new COVID-19 cases yesterday, which is a new daily record. Cases in the U.S. keep climbing, averaging about 62,210 new cases per day over the past 7 days. more than triple the number just a month ago, and up more than 21% compared with a 7-day average just a week ago. Texas, California, and Florida accounted for 31,847 new cases on Tuesday, nearly half of all new cases reported across the country. In response to the surge in cases, Alabama Governor Kay Ivey ordered people to wear masks in an effort to curb the pandemic. This order begins this Thursday and ends after July 31st. Walmart joined the fight against the virus as it announced that they will begin requiring all customers to wear a face covering while they are in their stores. Walmart now joins the company of Best Buy, Apple, and Costco, who are requiring masks inside of stores. This will not be in place until July 20th. Tech, telecommunications, and utilities were the only sectors to end in the red, and neither of them all by that much. The winners had great days though, as basic materials, financials, industrials, and oil and gas all gained more than 2.2%. Value and core stocks performed the best again today, as they attempt to make up the divide between themselves and growth stocks. Small cap value blew all other baskets of stocks out of the water, as it gained 4.55%. Small cap core also had a great day, as it gained 3.17%. The best day came from the three major cruise liners, which happened to be Royal Caribbean, Norwegian, and Carnival. The former two gained more than 20%, while Carnival gained a still stellar 16%. These stocks rose due to the positive vaccine news. The other best performer was another group of stocks, which happened to be the airlines. This is another sector poised to benefit from positive vaccine news. Shares of American Airlines rose the most as they gained slightly more than 16%. United Airlines was following pretty closely, as their shares gained 14.59%. Ball Corporation had the worst day in the S&P 500, as the home canning company had shares fall 5.56%. Shares fell due to news that competitor Canpack plans to create a $366 million aluminum can manufacturing facility. This is a clear negative for Ball Corporation. Next up is the Bank of New York, which had shares tumble 5.41%. This negative day came on the back of seemingly positive earnings. The Bank of New York beat GAAP EPS estimates by 10 cents, as they finished the second quarter with a gain of $1.01 per share. Revenue also beat expectations and rose 2.3% on a yearly basis. Revenue came in at $4.01 billion for the quarter, topping estimates by a slight $100 million. The CEO said, quote, "We're seeing momentum across most of our businesses as we continue to drive improved performance and capabilities across the company, and as we benefit from higher volumes and volatility versus a year ago." End quote. It is not clear why shares fell. Getting into earnings, we'll start off with United Health Group, ticker symbol UNH, which is the largest healthcare company in the world. United had mixed, but still positive earnings this morning. They beat non-GAAP EPS estimates by $1.88, as they finished the quarter with a gain of $7.12 per share. Revenue was up 2.5% on the year, as they finished the quarter with a revenue of $62.14 billion. This missed estimates by $1.4 billion. United Health said second quarter earnings were, quote, "substantially higher than anticipated, due primarily to the unprecedented temporary deferral of care in the company's risk-based businesses," end quote. Knowing that the company expects that will be offset in the second half of the year, quote, "by the assistance measures already taken, the resumption of deferred care, and future COVID-19 costs and economic impacts," end quote. Shares ended the day down 1.44% as they started the morning higher, but ultimately experienced a slow sell-off throughout the day. Next up is Goldman Sachs, ticker symbol GS, which is the popular investment bank and financial services company. Goldman had very positive earnings this morning, as they beat on both EPS and revenue estimates. Non-GAAP EPS came in at $6.26 per share, beating estimates by $2.25. Revenue was up 40.6% on a yearly basis, as they beat revenue estimates by $3.54 billion. The company recorded revenue of $13.3 billion for the quarter. These strong revenue numbers for Goldman were fueled by strong results in its trading and investment banking divisions, which made up 3/4 of the firm's revenue in the period. The CEO said, quote, "Our strong financial performance across our client franchises demonstrates the inherent benefits of our diversified business model. The turbulence we have seen in recent months only reinforces our commitment to the strategy we have outlined earlier this year to investors. While the economic outlook remains uncertain, I am confident that we will continue to be the firm of choice for clients around the world who are looking to reshape their businesses and rebuild a more resilient economy." End quote. Investors were clearly pleased with the results, as shares ended up 1.35%. Next up, we have Progressive, ticker symbol PGR, which is the large American insurance company. Progressive's earnings were pretty positive this morning. Progressive beat on non-GAAP EPS by 45 cents, as they finished the quarter with a gain of $3.04 per share. Revenue was up 2.3% on a yearly basis and only missed estimates by a small $50 million, as they recorded quarterly revenue of $9.67 billion. Shares ended the day up 1.64% as investors were pleased with the performance. Lastly, we have Infosys Technologies, ticker symbol INFY, which is a company that provides business consulting, information technology, and outsourcing services. Infosys beat estimates, but by tiny margins. Non-GAAP EPS was 13 cents for the quarter, topping estimates by just 1 cent. Revenue beat estimates by $100 million, as the company reported quarterly revenue of $3.12 billion, which was a decline in revenue of 0.3% on a yearly basis. Infosys was able to add around 120 new active clients and raise their operating margin to 22.7%, up from the previous 20.5%. Shares ended the day up an astounding 12.46%, as investors were thrilled. That is all that I have for tonight. I hope you enjoy the rest of your night, and I'll see you again tomorrow.